Well. Welcome back to Krown's Kiddo Cave. It's a nice little, actually not so nice of a Saturday. It's actually quite dreary outside, pretty shitty, in fact. But you know what? We got a lot to talk about on Bitcoin. I do want to apologize about the abrupt ending yesterday. It was for good reason, though. One of the bigger pieces of my equipment has arrived, but the rest still remains, and I'm being told that it won't be coming here until Monday at the minimum, which is just, oh, Jesus Christ, man. Every time, it's always something. Another day, another bullshit, as they say. But that's okay because, well, still got the old setup right here. So still going to be running with this, I suppose, for at least another few days. I do apologize about the less than, optimal setting right here, but it gets the job done. And, well, I guess if you're tuning in right now, those are the true believers, which is who we want to incorporate in a community like this. Anyways, what else did I want to mention before we get into this? Yes, so the Jewel has ended, or sorry, not the Jewel has ended. Wrote this down completely wrong. The Jewel has officially switched. In fact, for the next 3 to 4 weeks, there's going to be a period where there's actually no access or no available area to get the Jewel. I mean, well, there actually technically will be because I still have it on. I actually still have it listed. But what I've done to to dissuade anyone from perhaps getting into it is I've raised the price to about $10,000, or sorry, not $10,000, but $100,000. So yes, please do not buy it at this point. It is there to dissuade you, not as a mistake or anything like that. Just keeping it up there so we can allow people who do have access to it to view the videos on Teachable on how to use it and all that good stuff. What else do we want to talk about before we get into it? Upcoming, yes. So upcoming this next week. We're perhaps going to be opening up the beta testers for the Krown trading app a little bit more, so stay tuned for that. Maybe 10 to 15 more people. The first responses have been pretty damn good. We're getting we're getting phenomenal feedback on this, and this is exactly what we were looking for. We want to make this thing as robust, as fucking anti-fragile as possible. This is not this is not to just fucking force out there. This is something that I want to be using myself. Something that I'm going to quite literally have my name on, which is a little bit scary in some aspects as well. But that's why I want to make sure that this is as tight as possible, as slick as possibly can be. With all of that said, let's actually go look at the app right now. Let's see what we're doing right on over here. And Bitcoin trading pretty much synonymously across the North American zone and the Asian zone, but the East Asia zone trading a little bit under parity, and European zone also in parity with the other ones. Although we do need to change that into a euro symbol, as you'd imagine. 74.50. It would be quite the deal right now if it was in dollars, but no, it's actually in euros. Anyways, we do see open interest crawling up just a little bit more, almost to that 1 billion even dollar marker. And I do have a few things to say about this. I know that yesterday I did say that I'd be, with that in mind, probably going to be looking for a break, not necessarily a break, but a decent sized move, a multi-$100 move based upon that. But I'm actually going to rescind that statement. It's a little bit too late for that, of course. And of course, timing these moves is not, it's probably better to be looking at volatility metrics anyways. But, looking at the way that kind of the higher time frames are shaping up right now, I think that we're actually kind of due for another day of likely sideways for today's Saturday, which, I guess is... it's par for the course right now. We've been going sideways for the last 7 days pretty much. So usually when Bitcoin does do that 7 days of sideways, we actually typically do get a move, once every week or such. Even in the most dreary of dreary conditions. If you remember back to late 2018, after Bitcoin I put in a low at 3,100. Then we were having this extremely slow price action, except for that first major up coming off the low. But after that, it felt like every week there was on cue one big move, one multi-percentage move, and then sideways for the rest of it. So it's kind of like a break almost. Think of it as a little bit of vacation. But now I do believe that today probably going to be quite as well, but likely leading up into probably whenever CMEs open up on Sunday, which I believe is 5 p.m. Eastern time. That's going to be when the game turns back on once again. And I'd imagine that between that time and New York Stock Exchange open on Monday at 10. Sorry, it's 9:30 a.m. Eastern Standard Time. We probably do get some price action precipitated about around then. The other things are lining up with that, so I do kind of like that as a read. Other than that, you can see that the total market cap and altcoin market cap are pretty much flat here. I don't really see that as any sort of a difference. Fear and greed index is ticking out of 51. It's mostly flat here, not really telling us anything different. Daily volume is pretty piss poor as you'd expect, but we are seeing consolidation on the lower time frames, which is exactly what you'd expect. Which again, volume has become like this weird meme in this market where people just associate volume with like good, and that's not always the case. In fact, coming from a traditional market background, I'm sure that anyone else who's traded traditional markets, typically when volume rises, you're looking at like extremes, typically to the downside, because intuitively think about it. When volume rises, what does that mean? It means that more people are trading. Well, when do people trade more? When people are typically emotional. When do people get emotional? Well, typically when they are in pain. When are people in pain? Well, for the most part, people only fucking long because they typically don't have the margin to cover shorts in traditional markets, and well, and so it's typically with downwards price action, right? Anyways, right now volume going lower does not. I don't look at that as a bad thing or a good thing. In fact, I'm actually still looking up here. I'm still long for full disclosure. I guess I'll show my position later. I want to talk about the ribbit situation as well. I want to follow up a little bit on that. And I'm happy to stay long. I'll talk about my position and kind of where I'm managing at a little bit later. Of course, doesn't mean that it's 100% going to go to the upside, but there's a nice risk reward trade on the table, which is exactly what I'm looking for as a trader. Not to fucking tell the future, but to just get good sound risk reward trades in, because I know that over time that's the edge. That's the thing. Anyways, okay, cool. So, with regards to Ribbit, they actually got back to me on my Twitter comment on their thing. Not that this is like a huge deal or anything like that. I mean, this is just so fucking petty right now. But they actually did admit that they should have rolled back. The reason why they didn't is because it was going to be faster and more expedient to just reimburse the people who lost. Now, of course, this is an explanation by them, which is it's fair enough for them to do. It is their exchange, but for me, that is not good enough, because it sets a precedence for the future that they will make that same decision based upon the future, even though they acknowledge that it was the incorrect decision. I strongly believe that a rollback would have been the right decision here. Any sort of traditional major exchange would have done a rollback. This is what happens when you have exchange error, and this was an exchange error. Now, I want to speak deliberately to the people who are saying, but Krown, this has happened on GX and whatever else exchange, where we have these like very nasty pieces of price action, and then they actually reimburse. Those are completely different scenarios, actually. The one that people are talking about with GDAX, where they had a flash crash, was actually real price action, right? Those were real buys and sells happening based off of the real price listed on the exchange. The situation on Ribbit is different in this way, because what was going on there is they had a bad feed going from one of the index prices being displayed on screen, which prompted all of the liquidation engine to essentially just take everyone's position out. That is exchange error, and when you have exchange error, rollbacks need to happen, because people are going to get hurt who do not deserve to be hurt. In fact, a lot of people from this community have been reaching out to me saying that they while they had like perhaps like a long that got liquidated, they typically had some sort of a stop a little bit under, so the long gets liquidated, they get reimbursed on the long, but now they're holding this short that was entered in at market, so they have like these god awful prices, and that's a huge, and that's a loss, and that's a real loss, and Deribit will not help them out with that. So I do want to say that is the issue with it, and that's why this was the wrong thing to do. You're hurting the people who did not deserve to be hurt, and then you're letting the people who do not deserve to win, because there were people who actually bought at those levels, massively profit. So that's why I think and sorry, all of what I've said prior to now is fact. That is I mean, everyone would agree upon that. What I'm now going to say is more tinfoil hat shit, so turn off the fucking speakers if you don't want to hear any of that. I completely understand, it's more speculative, but to me, why would they make that decision in lieu of that and allow those people to keep those trades? Your mind only wonders why they would do that. So that's why I've lost faith in them. That's why I will no longer be trading there, and that's why I'm looking for a new exchange. And onto that topic of new exchange, a lot of people have been reaching out to me to start my own exchange. I would love to start my own exchange, except the problem is that I also want to trade on my own exchange, which would present some sort of like massive, problem with integrity, right? Or maybe not integrity is perhaps that's not the right word, but it's the same thing as like Charlie Lee letting go of his Litecoins. Well, then again, maybe not. But the thing is you want to be unbiased, and as a trader, people would always be saying, well, Krown, you're trading on there, and you're also the own exchange. Like, what the fuck's going on, man? I'd be like, yeah, that does sound pretty damn shady. So fair enough. Anyways, that's why I think Ribbit fucked up. And that's why I think a rollback was warranted, and they set a terrible precedent because that means that they will do that in the future. And for myself, I actually didn't even get hurt on that. My main account was covered, no problem. My streamer account did get liquidated, but they did give the equity back, to be fair. But I did lose my entry on that beautiful long position, which was like an average price of whatever I showed on YouTube last. I think it was like 8,500, somewhere around there, which I was quite happy about. But fair enough. You can always put that position back on. It's more of an ego thing because your P&L long term is going to be the same thing if you want it to be. But again, it sets a bad precedent long term because for me, I have to realize that if they're going to do that in the same event, if that happens again, which, hey, these things do happen. These things do happen. I've seen it plenty of times in traditional markets, and you can count on them there to roll back. But in derivatives case, they will not. And for me, it could have been that I was sleeping at the time, or I had some sort of a stop loss in there, as did many people, and get hit on something like that. And then you're fucked. You're absolutely fucked, and there's nothing that they're going to do about it. And then again, they let the people who should not in any way, shape, or form be profiting from this make fucking millions from this, which is just, it fucking sickens me is what it does. Not that it should, it really shouldn't, but man, it feels wrong. It feels dirty, and it's one of those things. It's like, all right, we're talking about cryptocurrency as a mature space now. Well, in the same fucking day that we had derivatives nonsense, we also had BitMEX giving up all of their, or BitMEX Twitter got hacked, I believe, and then also they somehow like exposed a lot of their customers' emails. Then there's like some other like random exchange that's just completely irrelevant, but still it kind of matters. Printing, like showing like a $15,000 print on Bitcoin. This is just not what you want to see when you talk about a space coming into maturity and people are talking about ETFs and shit like that. It's just, it makes me think that, maybe my 2020 date for an ETF getting approved is a little bit too optimistic. I'd still kind of stick towards Q2 of 2020, but hey, man, this is, it's just not good, man. It's just not good. Anyways, okay, I think I beat that horse to death. I don't really want to focus on that anymore. However, I do want to put out the message that I am greatly in need of an exchange. I would love to just have an exchange that works, that has integrity, that has liquidity, very, very important, preferably options, preferably futures as well. But at this point, man, I'm willing to just forego that just for now, just to be able to fucking trade. Of course, I'm certainly not, and I want to be deliberately clear here, I'm certainly not as good of a trader or as profitable as a trader when I do not have access to options. That is the bread and butter of my game. That is how I prefer to play, and I would most rather wait for an exchange to come up with something like that. So hey, man, if an exchange is listening out there, the space is ripe for disruption, baby. All you have to do is just provide a good fucking service that just operates right. That's all you have to do. That's all you have to do. And I would be happy to go on there, and I'd be happy to pimp the shit out of your exchange in the way that I'm happy to support any product that I personally use that is good. I'm always happy to do that. Anyways, I realize my face camera's still not on, so there's been people who've joined here now for the last like week or so who don't know what my fucking who don't know what the face attached to this raspy lesbian voice sounds like. Well, or looks like, I should say. Well, soon enough on this next week, hopefully, if I can get my fucking package, that would be great. We can actually turn the ignition back on. But making some progress on the cave setup right now, which I'm very, very happy about. Anyways, let's get into the actual analysis. But before that, I would like to, as always, wish you the best of the best and the happiest of the happiest on this rainy, over cloudy, probably depressing day for a lot of people, although I actually really enjoy this weather. And let's get into the live stream right here. There she is, Bitcoin on the 10 hour. Actually, don't want to focus on the 10 hour. Let's start with the daily right here. But overall, like I said, I am still long. I'm happy to be long as we're above the 200 simple on the daily. I do believe that we're kind of flagging out and consolidating here, and this is a healthy consolidation. I do think that shorter term, we probably do pop back down and test around the 89 or the 200 simple. You do see that, more importantly, look at the red 10 simple right here. This has absolutely just skyrocketed to the upside here, which has gotten a phenomenally positive slope and getting significant divergence between that and the 21 exponential moving average, which to me is talking about the strength of the more short-term daily trend, which during a consolidation like this, that does make my bias to the upside. So I am biased to the upside. Is my bias has been to the upside, you know, as soon as we got back above essentially like 7,800, 7,900 right here, that blue 3/7 on exponential moving average. But remember, and I want to be so deliberately clear with this because I fear that the same people who got at me for switching my position right here, which I hope that I was very clear about that, I'm going to do the same thing if it happens here, man. I'm telling you right now, if we do close a daily doodle below the 200 simple moving average, which is crawling its way up to about 90.69 right now, great number, then I will be happy to flip short. I will target moves down towards like 85, 86 very quickly, and then I will look for continuation down, likely towards, you know, 8,200 to 8,000 region down around here, and then we'll come back and reassess. But I'm not really leaning towards that happening. I actually do think that the upside resumes here after probably another day or two of a little bit of sideways, and I would be looking for another test down to 9,100-ish region. Just based off the daily setup right here. But this is what's called putting in time. I've never really referred to that concept before. My mentor used to always used to reference this concept, but that is as long as we're above all these major moving averages, a healthy structure. That is fine. That also means if we break it, that all goes out the window. I can take shorts and target moves much lower. Trades on the table. Again, it's only just an inflection point. Doesn't mean that, I'm 100% going to be right on all my trades. You guys have seen me, if you've been here for a while, you've certainly seen me take losses, make bad calls in the past, and I will certainly make some bad ones in the future, of course, as well. The thing with that is that what I do pride myself on, or what I can't, not that I pride myself on it, but what I can count on as a trader, not as a crystal ball thinker, is that this area right here is a damn good inflection point, a nice pivot point on the market. If we do take it out, my bias changes. Just like this guy right here to the upside, it's the exact same thing, just in the opposite direction. Anyways, looking at momentum oscillators, we do see that daily stocks are actually down right now, but a week down right here, and they are technically above the bullish control zone as it is right now. And more importantly to me, we actually did break this trend line that we had been forming over the past literally 4 months, ever since August. Wait, is that 4 months? August, September, October. These months ain't loyal. Had enough of them. Could we come back down and test this trend line? Yeah, and that would be right at the edge of the bullish control zone, and I'd be looking for, at the very least, a little bit of a bounce there. So that kind of would align with, another day or two of sideways, maybe slightly down to like 9,100 or something like that. And yeah, I'd look at that as still kind of a confirmed breakout, just retesting the breakout area. Looking at daily RSI, just kind of going flat here, that's completely fine. The longer that we kind of go flat here without doing too much damage to price action, just allows the exponential to kind of catch up to it. And I do think that we'd likely come down and test it, but I'd be looking for a bounce off of it first and foremost. Historical volatility percentile is still maintaining well above the moving average and still maintaining this nice pop right here, which I do like, which tells me that the move is still in its prime, if you want to call it that, and we got plenty of room to move up here, explode, as we've gotten all the way up to 100 before in July, right? June, July, we got up all the way to 100 read, which is pretty phenomenal. And to me, this says that we're still kind of expanding here. So I don't believe that the move is over just yet. I think that the market's just kind of lulling everyone to sleep, and then once everyone's sleeping, once everyone's not watching, once everyone stopped viewing this video, then just like clockwork, the price action moves once again. So I do like what I'm seeing on the higher time frames, and of course the higher time frame that I go, the better that I like it. Actually, looking at the 2-day right here, well, the 2-day is kind of inconsequential. Actually, it's not really giving us too much. We are above all major moving averages. 2-day Stokes still very much up. We did break the trend line that we had been forming ever since August right here. Breaking out of the neutral zone into, or perhaps going to be testing for the first time on this next tick into the bullish control zone. I do like that. Other than that, not really too much to report from the 2-day that isn't already said about the daily. The 3 days where things start to get a little more interesting right here. we do see that 3-day Stokes have plenty of room to the upside, and these have been phenomenally accurate with coin. At the very least, nice bounces, even in bear markets, when they get into this region right here and have a nice cross the upside, and more importantly, get above the critical zone. Those two components absolutely critical. The last time that we saw a similar signature to this was on the lows in December, literally at the low at 3,100 right here. Time before that was coming in from a lot of these bounces, a lot of these dead cat bounces in 2018 August. We have June, we have April, and we have the February bounce. So this guy right here, a $6,000 bounce. This guy right here, a 4,000 bounce from 6,000 to 10,000. This guy right here from 6,000 to 8,300, and then this guy right here from 6,000 once again to 7,500. So I do like that read overall. We have had a pretty damn, impressive move thus far from it, to be fair. So would it be would it be fair to say that perhaps this is mostly played out? I mean, that is a 32.5% move. You can't get too damn greedy. But I would say, I don't really see any reason to not be biased to the upside here, as long as we're maintaining all major moving averages on these higher time frames. The 3-day, I believe, will be closing later today at 8 p.m. Eastern Time. Yes, indeed, it will. And if we close like this, that's fine. As long as we don't close below the 21 exponential moving average, I think it's overall. I think it's overall fine. Just a nice little consolidation after a fucking almost $3,000 move 1 week ago. What else we have to look at here? 3-day RSI getting above the neutral control zone for the first time. It's not a control zone, but the neutral zone for the first time in a couple months here. So a little bit of a change of behavior. More importantly, actually, on 3-day RSI, we do see that there is a lovely falling pizza in place. We actually did break to the upside of it, or is it a falling channel? No, it's a little bit more of a pizza now, isn't it? And I trust falling. I'm referring to falling, but just for people who might be new here, for people who are familiar with like this crazy fucking cave lexicon that we have, this crazy community that we have. Well, you know exactly what I mean. I'm a lot more intent to put weight on formations that arise in RSI oscillator rather than actual price action itself, especially some like a falling wedge. Now Bitcoin does like to play out, channels, triangles, and all that good stuff on on price action. I do like that. I do put a lot of weight on that, but pretty much anything else, I don't really care as much about price action, and I quite literally will not play it on price action. Cup and handles here and there, actually, I really do like those. But I will play them on RSI. We actually do have one on RSI, and that would again kind of speak to the bias here. Now let's titrate this back. Let's take this just one step back and talk about the weekly. Now, what's going on in the weekly? Well, the weekly, as you can see, the weekly is cut and dry. It's as cut and dry as it can fucking get. There's one trend line to rule them all. While we are above all major moving averages, while we do see momentum also just turning up, while we do see a lot of positive things, we are still getting rejected by this trend line right here. Why is this trend line important? This is the trend line that held up the consolidation during, oh man, I hope I'm talking into the mic, by the way. This is what held up, all right, let's make sure that I'm actually recording. Oh yes, I'm recording. All right, great. Don't have to re-record this one. But this trend line held up the consolidation during the 3-4 month period from June, July, August, September, right? Before the big breakdown. So getting back above there would be a change of behavior on a weekly time scale, which to me would be very bullish. I would look for a move, short to medium time frames into the mid 10,000s, like 10.3, 10.5. And then look for continuation overall to this 11.5 area right here. Any sort of a weekly close above 11.5, and I would be targeting moves longer term towards 16,000 and beyond. You can also see from a volume profile perspective that realistically anything above that 11.5 region or 12,000 on maybe a lower time frame right here is just null and void on the volume profile. We're gonna absolutely fucking rip above there if we can get above there. Put this in perspective. I mean, I feel like Bitcoin was ripping around even when it was in like the 10 to 11 and 12,000s right here, and this is double what we see above there. So to put that in perspective with like the opposite scenario, remember during the 3,000 area or 3,000, 4,000 area, this was a very, very high value node, and price action was moving at a snail's pace, and it was just a fucking grind each and every day to watch. But for now, you do see that we're kind of working our way up, and we are living above that last little higher value node, this last little splatter right there. So okay. But remember, here's the thing. This trend line, very, very important. Until we get above it from a weekly perspective, it is difficult to look for that next major leap to the upside. I can show all sorts of bullish things. I can show exactly why I'm biased to the upside here. I quite literally have a long position once again. But until we actually take out this trend line, this is going to turn into a short-term trade if we get rejected here. Especially if we go another week with getting rejected here. So again, this trend line is coming in right around 9,600. So if Bitcoin could close above 9,600 tomorrow night at 8 p.m. Eastern time and close the weekly above there, that would be phenomenal. I do not think that we get that close this week. I think that we're gonna have a chance to get it next week, and that's gonna set the tone for the next 2 to 3 months. I'd imagine. I'd be very, 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 very bullish if we got something like that. Not only because of what we just talked about right here, but also looking at momentum also. We do see weekly stokes crossing the upside right here. These have been phenomenal. Just trading them blindly, which I don't recommend that anyone do, but trading them blindly would have been very forgiving. We do see that the last few across the sea upside called both the ultimate low in 2018 December right here at 3,100, then the higher low right here at January 2019. The cross before that, called this lovely bounce right here, another $3,000 bounce from 6 to 8, and this guy right here from like 6 to 12. And then if we go back in the history of time, you can find plenty more examples, although we have to go all the way back down to the last bear market in 2014. The weekly stokes haven't really stayed down there too many times in history. Only 3 other times besides what we just looked at, and that was April 2014, October 2014, and February 2015. So that's February 2015 is the ultimate low right here. October is right here. Right here on this little bounce. So not that impressive, actually. Did roll over essentially. And then the one before that was this guy right here in April, of course. So this was a pretty phenomenal rally as well. I think about a 2x, a 100% gainer on there. So pretty damn good. Overall, while I am presenting both sides, I am biased here, and I'm happy to represent my bias with a trade. And of course, weekly is above all major moving averages. I'm never gonna hate anything that looks like that. Let's go over and check out the monthly, which, remember, we just got a new one, and this kind of rounds up my bias a little bit more. We do see more divergences between the red 10 simple and the yellow 21 exponential moving average right here, which to me is telling me that the trend is strengthening into the upside. This was a pretty damn good close. It could it have been better? Yeah, absolutely. If we would have closed above like 9,500 on a monthly, that would have been like an obvious just fucking blast it to the. Sorry, I shouldn't say this. I don't want to kind of drive that sort of narrative, but I would have been quite optimistic for further follow through almost immediately. I'll put it that way. From a monthly perspective, it does suggest that if we actually do break that critical $9,000 region to the downside, we very, 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 very likely come down to the $8,000 level, and at the very least test the red 10 simple right here. I would be looking for an initial bounce off there on a monthly schedule, and then we'll come back and reassess it. I would be skeptical if we break down either which way. If we break down from $9,000, I do not look at that as I'm not looking for the next long. I'll put it that way. I'm looking really for shorts if that were to happen. Looking at momentum oscillators, we do see that monthly stokes are actually hinted at across down. Now, of course, this is fresh. This is also quite weak as well as it stands, and we have about seeing as it's the second day of November, we have another 28 days left, or 29 days left. No one, how the fuck do you remember how many days? I know how you remember. You just look at the calendar. 30 days. Okay, great. So 28 days left. So it's pretty fresh. You can imagine that if Bitcoin, traveled its way back above 10,000, this will retain its its bullish posturing. If we end here lower though, it will cross the downside. It'll be a weak cross nonetheless. It will only be like a really nasty cross to the downside if we do probably break like around towards 8,000 and close there end of month. So I look at this as just coming up to test the bullish control zone, and your first test kind of into it typically does provide a little bit of impetus for resistance. More importantly, what I'd actually put more emphasis on for the monthly is the monthly RSI, and that's even going to take backseat to what I'm talking about after this. But with regards to the monthly RSI, we have a very similar signature to what we saw back in 2016 July, right? Bitcoin popped up, broke itself out of the bear market to switch up right here. We had a nice pullback coming in from that region, a pullback to the tune in the way that Bitcoin lets you do it, like a 40, just like a clean 40% pullback right there. As the RSI tests the bullish control zone, gets in there for the first test, gets knocked back, tests the exponential, and then marked up for the next like 2 years straight to the upside, going from like 350 to $20,000. Well, very similar action to what we're doing right here. And remember, history. This is why I don't look at fractals. This is why I look at indicators, and this is why we have that saying that history rhymes. It doesn't necessarily repeat verbatim, but it does rhyme certainly. So looking at this right here, I look at this as a test first as a test into the bullish control zone, rejected, a little bit weaker than what we saw back on over here, just by the way, relatively speaking. And coming back down to the exponential on it, bounces off it. And, last month did have a decent close. So if we do work our way back up to this 60 to 65 region up here, I would be looking for that I would look at that as very, 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 very likely to set up a comfortable range between the 65 and an 80-inch market, just like what we did on over here, not so long ago. It's not going to look exactly like that, but something similar. Not only that, but like I said, something a little bit more important, which I don't look at all that often, but because it really only comes into play like a couple, like when we get a new monthly, really, is the accumulation distribution indicator, which has retained its positive slope. If you are in the technical analysis program, there is a bonus module on how to use this indicator. To kind of briefly explain it, I just care about slope on this one. I've been called a slope racist before, and you know what? You're fucking right, man. I'm a goddamn slope racist, but we don't see colors on these bitches, so leave me alone. Chris Cuomo and CNN and whoever else might be. I have like very lofty expectations on who's listening right now. But looking at this right here, retaining the positive slope, exactly what we saw from last month. And remember, that last month was the month of $3,000 pump. Godzilla dildo is what we should call that. So to me, that does still bias me to the upside on a monthly time frame schedule. Now, let's switch it up completely, because all we've been talking about as of now is higher time frames. Lower time frames, they're going to have all sorts of crazy shit going on. So let's go into the lower time frames, kind of see what they're doing. See 4 hour right here. 4 hours looks like it's kind of flagging out. It's a little bit sloppy, but you see the same areas getting respected. We get the golden cross. We are still holding it up and using the 55 exponential moving average as support. We've actually come down and tested it, or at least I would consider this test right here. And more importantly, we do see that green 55 exponential moving average migrating above the blue 377 exponential moving average. So getting lower periods above higher periods, overall good, strengthening that trend to the upside. I'd just love to see the cyan 89 and then the purple 200 get back above the blue. And then I'd say this looks nice. Anyways, 4 hour momentum oscillator still headed north. Still got 4 hour Stokes headed up and out of the bearish control zone for the first time in a few days, ever since late October. 4 hour RSI is flat-ish. I mean, this looks like a bullish reset is what it looks like to me as it stands. Just coming down from the bullish control zone into the neutral zone and, finding support within this region. That's okay. There's not really too much to say about the lower time frames that already hasn't been said. If we want to kind of mark them off, what we could do is put a nice horizontal right here. You can see that it's synonymous with the blue 377 exponential moving average that's currently coming in around $9,000. So I do believe that a 4 hour deal to close below $9,000 if you want to be aggressive, and I would be closing longs, and I probably, of course, it's not financial advice, I'm not a financial advisor, but I perhaps will consider a short at that point. I think the line in the sand for me is about 87.50 to the downside. Any lower than there, and it's just well, we're going lower. But for right now, sideways putting in time here is okay. Let's see what else. Also very important. Historical volatility percentile is finally starting to really cool off here. We've been waiting for this for a while. It's taken a while, but it is starting to finally cool off. Once we start getting back into this region right here, below like a 20 read, that's where I'm going to start to be looking for that next potential move. And sorry, I didn't even talk about the upside here. Of course, the lower time frame range, the most preliminary range, again 9,000 to the downside, and then right here is 94.50 to the upside. So anywhere within that range doesn't really mean too much to me. I actually do think that we test the downside of the range once again, most likely, before testing higher. Again, I'm not really married to that belief, but it kind of looks to me like that's probably going to happen on like a daily. But things don't really change from even a lower time frame perspective until we break above about 94.50. If we can break above 94.50, let me actually just refresh this so I can get a. Yeah, there we go. If we can break above 94.50, I would target a move towards 97.50. That's a $300 plus move, so very tradable in my opinion. And that's where things start to get interesting, because above 97.50, I would be willing to call, or I'd be very happy to call a massive break to the upside into the $10,000 region, probably like 10.3 to 10.5. In fact, we very likely would test this trend line that we've been living under ever since June of this year, right around this level. So I would look at that as still relevant level. I would look for an initial pullback off that region, but grinding that area out would actually start to look good from a higher time frame perspective. So again, it's just one thing before the other, of course. But again, going back down to lower time frames, that's what I see right here. Now, I'm sure that some people are looking at this as some sort of like a flag formation over here. Could you make that assessment on it? Well, to be fair, you can. So let's look at it, from I'm not, and listen, while I am bullish here, while I am long, I'm going to show you something that's more like hopium and something that... Well, let's just talk about it. So the only reason why I'll give you the real secret. The only reason why I'm doing this right now is so that I can have like some sort of clickbaity title and then compete with all the other YouTubers out there. It's like stupid petty reasons to do this. Anyways, let's see what this would kind of align with as a target if we do break to the upside, and this would be a daily total close above 9,500. Or sorry, not 95, but let's call it 95.50. I'd be looking at a measure move all the way up to 11.5, so that would be weekly resistance. So that's what I'm going to call this video. Weekly let's see, weekly target 11,500. Just some bullshit like that. For the people who've been here for a while, you already know that the titles of these videos have very little to do with the videos. In fact, during the bear market of 2018, when I was bearish pretty much the whole way, I was constantly publishing bullish titles. But the reason for that is, and I've really done a lot of research with this, bullish video titles and bullish focused videos get a lot more views than bearish ones. Even if the content of the bearish ones is significantly better, it's very, very strange. But the average person probably just plays things to the long side. They're not a trader, and that's why they are more interested in something like that, most likely. So for this community, which is comprised first and foremost and focused and catered to for traders, that's not my focus here. So I only do that to just fuck around really, and should I do it, should I not do it? Well, it's kind of fun, and it's also kind of fun to sometimes, especially during the bear market, when I was doing it to get people in there and then talk about, I think it's actually going down to 4,000 and 3,000. It's kind of wrecked here actually. So fair enough. I'm going to get rid of this. That's mostly bullshit, but hey, it would be in play. It actually does work out. The flag formation is there. The volume signature is correct as it is. So it is technically valid, to be fair. It is technically valid, but I would really take it one step at a time, with the targets that I just spoke about. First and foremost, need to break above 94.50. Then I'd look for a move to 97.50. Above there, I'd look for a move towards 10.3, 10.5 region. And then above there, I'd look for a move to 11.5, 12,000-ish, really. And that's not going to happen at like the snap of a fucking finger. It's gonna likely take its while. Let's look at what the other lower time frames are kind of agreeing with, or saying, and see if we have any sort of agreement within this market right now. Let's see. 3 hour Stokes still very much upwards and onwards, actually breaking, looks like we broke this trend line right here. Nicely done. So momentum being gained to the upside. I do like that. 3 hour Jewel is actually kind of flipping around here. This is not a signal at all whatsoever, but we have a nice inverted head and shoulders in this one. I'm actually curious to see if this inverted head and shoulders actually does operate as one. I've never really identified him in this in this indicator, in this rendition, but I'd be curious to see how this one does operate. It would imply a move back up here towards the 70 and plus region, and more importantly, the 3 hour historical volatility percentile is really cooling off here. So we are seeing the lower time frame starting to cool off. Once the 3 hour and 4 hour get down below like a 20, that's when I do think that a move becomes extremely likely, and probably, if I had to guess, sometime late Sunday to like mid Monday is when those are going to really start to cool off there. Let's see, is 2 hour green with all those guys on the 2 hour Stokes? Yes, indeed we are. What about hourly? Hourly are headed down, but again, lines up with a little bit more sideways here. And perhaps test a little bit to the downside, back down to 9,100 in the meantime. What else do we want to talk about before we get out of here? Let's go look at the expected moves chart. Expected moves chart is starting to curl back around. So this is what you do want to see. This is again what's called putting in time. So historical volatility gets a chance to cool off. We put in a little bit of a base here, and look at this. The rings start to flip around, and now we're squeezing a little bit to the upside, just a slight bias to the upside after very little damage to price action was done during this consolidation. So I do like that read, and the ranges are a little bit exaggerated here. It actually does actually does agree with my more conservative ranges. But if we are looking at this from from a daily perspective, you could say 97.50 to the upside. Yes, I'd agree with that. So it is a little bit of a less of a chance to happen today, but you can see that the upside I do think is actually, the downside is a little bit more incorporated. The downside showing about 8,800 to the downside, so that's kind of around my line in the sand right there. So I do think that it's likely going to line with this collapsing a little bit more coming into the next into the next open. And so again, just a lot of these things agreeing with each other. Lower time frames suggesting contraction a little bit more still, with slight bias upside. With slight bias the upside. So this is what you kind of expect to see. What else do we want to look at? I think I've covered just about everything. Let's start to talk about the Bitcoin subsidiaries. Bitcoin dominance. What do we have here? Bitcoin dominance still mostly sideways. I am bullish on Bitcoin dominance as long as we are above the 200 simple and especially the 200 exponential moving average right here, which we are wicking off right now. I'd have to say, coming into next week, I'd be looking for this to. Coming into like the next week or two, I'd probably be looking for this to pop back up to 71.5% and then 72% up here. This looks good. Consolidation above major moving averages as things start to flip around. What does the daily look like? I'm curious how this one's shaping up, and then let's go check out a few of the beautiful altcoins. Printing it. So we had the falling pizza right here. Boom, major move up. It did pretty much hit the target, to be fair. Comes back down, consolidates, and holding its own along this area right here. So I would be biased against altcoins versus Satoshis, meaning I would be looking for alts to go down long term versus Satoshis as long as we remain above this 69.5% pivot right here. If we do violate that, then yeah, alt's going to have a little bit of a party. But I think that the altcoin death spiral is still in play. At least for most of these guys versus Satoshis, maybe not versus dollar, but for Satoshis, I do think that there's more pain to come, most likely. Cardano on its, this looks terrible. This looks fucking terrible. It's just fucking rising channel right here, breaks down, retests it, and what are we gonna, it's just rejected below all major moving averages. Once again, the momentum oscillators have had a chance to basically reset, and price action just moved basically sideways and lower. So that's just allowed it to reset. I'm curious how. Hold on. We actually do have a jewel signal right here. Now, this is in an area where I'd never take a signal. I would love to see this sort of setup back, down in this region. Then I'd consider that a perfect signal, and I'd be blindly buying. But no, I shouldn't say that. But interesting nonetheless. Daily RSI, very bearish. Here's how Link's shaping up during this one as well. It's kind of been the... I don't really have a strong opinion on this one. Still holding the range, really. Probably does come back down to 27,500-ish region. Probably just bounce there as well. Other than that, I don't have a strong opinion on this one. And let's go look at Mr. Buteral versus Bitcoin. Where are you, you beautiful bitch, you? There you are. Yeah, looking pretty roly-poly over here too. This is not good. Whenever you see the rolling, these rolling hills, it's the rolling hills of distribution, and it's exactly what it sounds like. You're getting distributed on your face. Momentum oscillators are looking okay for some of these guys though. So maybe we do have another pop to the upside. Maybe it does test back up towards this region, like 2 million satoshis once again. But longer term, I'm not so confident on something that looks like this. Perhaps not so thrilled with this as a charting formation. Let's go check out the other top shitcoins versus spot. USD, and let's see Mr. Buteral first. Mr. Buteral still, whoa, okay, so we got a little bit of interesting thing here. We did break this trend line, and we are maintaining it right now, but I will say that coming back down to retest this trend line and hang on this trend line so much is usually not a good sign in my experience. Of course, it's not all said and done until we actually break below this region once again, which would be about 182 and close the daily below there. Or sorry, I'd even make that like 180 and a half. If we close below there, then yes, I would be looking for this to come all the way back down to like 165, 166, and then probably lower over time. But hey, technically, as long as we're above that 180 and a half pivot, I technically should be looking towards a move towards 190, 191. And because Bitcoin is, I'd be a little more bullish on Bitcoin. I would be biased the upside here on most alts versus US dollar as well. This is Litecoin. What's she doing? living below the same trend line. So same trend line, different asset, pretty much. It is a falling channel, to be fair, which typically do break to the upside, but the time spent within that falling channel is the X factor of this formation, which the longer it takes, the lower you get, the lower you work yourself. And this one's been going all the way since June of this current year. More importantly for me, I put more weight on the weekly. Obviously, a higher time frame holds more weight, and I don't really have any real reason to be bearish on Mrs. Litecoin long term until we actually break and close below the 200 simple once again, which is currently coming in a hair lower than where we are right now at about 57 and 90 cents. So that's what I'd be looking at there. I do want to report that what the fuck did I just say? I do want to talk about traditional markets right here. Phenomenal. Fucking phenomenal. New all-time high. While I did say I was a little bit cautious on this, the right thing to do, as long as we were maintaining above this pivot right here at 302, is to remain long. Even though there certainly are some warning signs here. I would not, I would not discount that fact. There are warning signs here. I don't want to make it sound like it's all hunky dory, but for all intents and purposes, there's no reason to be bearish, especially as long as we're above 302. But now you could even use this as a pivot right here at around 304 region. The reason why I think that this is relevant is because, as we've shown in the past, that Bitcoin and traditional markets seem to have a lovely interplay between the two on the macro. So I'm going to bring up Bitcoin over here in the orange, or I'm going to imagine it's probably going to be orange line chart. Oh, you fucking bastard! What do you mean BLX index is unsupported? How dare you? Let's try maybe this. Maybe this. Okay. Well, now we don't even. Motherfucker. They're fucking with me today. I'll just use Bitstamp then. BLX index. I've had it. I'm fucking at it with you. Let's see. Let's do this one. Okay, cool. This one's not gonna have as much price action history, and it's in the purple line chart. I'm gonna put it on log scale here too, and then just kind of just use your mind's eye on this one. Going all the way back, let's do it on a weekly. We do see that on the macro, they are moving together for the most part. Bitcoin started here during, this is why you need to see the BLX, because they started rallying at the end of 2010 together out of this bear market, both of them kind of coming in together. They put in their top in like 2014 and did this sideways consolidation for the next couple of years, pretty much at the same time as well. And then during 2018, we put in the highs around the same time as well. You do see that Bitcoin typically tops out first, and then actually SPY puts in the bottom first and reverses faster typically. So coming out of 2014, 2015 right here for SPY, faster, and more recently faster as well, making new all-time highs. So I would say on the macro, this does bode well for Bitcoin, historically speaking. Of course, I know that the crypto anarchists are going to fucking hate this, but that's what we have seen in history. So I go with that until I see something new happen. I just don't really have a reason to believe that the trend has changed until until that's in place. Anyways, I'm gonna save the rest of the juicy stuff for tomorrow's video because this one's already fucking 45 minutes long. That's insane. If you're still listening right now, you are a true fucking TA autist like myself. But hey, what else are you gonna do on a rainy Saturday morning? I'll switch back on over to Bitcoin right here. Let's just wrap it up very, very simply speaking. Daily, 200 symbol to the downside. That is my gatekeeper for staying long. If we go below there, I will flip short and likely target a move towards 85, 8600, and then likely lower after that. But until that happens, I'm happy to hold this long and see it play through. The major area to be aware of to the upside would be this guy right here. On a daily closing basis, I'd like to see about 95.50 taken out to the upside. On a 4-hour closing basis, I'd like to see, well, there's multiple trades on a 4-hour, right? You got this guy right here, right around 94.50. That opens up the doorway to 97.50, but above 97.50, that's where things start to get interesting because we do reveal the flag formation, and I'll be looking for a move into the mid 10,000s and likely beyond after that. So that's going to be all for today. I do want to wish you well on this rainy and quiet little Saturday morning. I'm going to try to get some more sleep and then eat a shit ton of food. So I'm wishing you well over here from Helsinki, Finland. Take care, and until next time.